This is Justin Pulitzer. This is my weekend video for the week ending November 30th, 2014. Let's jump right into it. I hope everybody, by the way, had a wonderful Thanksgiving and we're off to a good holiday season. So you can see in the chart here we've been in a very steep incline, and we've reached the 1.272 Fibonacci extension that I had discussed, and we did it kind of in some herky-jerk fashion at first, then a bit of a grind higher with a bit of a gap and still some more grind. So it's been rather narrow trading ranges the last few days. So my thinking here, and I had discussed this last week, is that of course the market is susceptible to a liquidation break at any time. You can see we're overbought here on the stochastics. It would not surprise me to see some type of a pullback to at least the 20-day moving average, which is down here at 2004.52. Anything more than 5 or 6 points is very extended in that, and we had been massively extended at the peak of this incline, but you can see that the 20 is caught up a lot into this range, and all of the major moving averages are still obviously bent upward as the market's at new highs. So you have the 50, the 100, and the 200 all moving up. So I think that those will, along with some reference levels, would be interesting levels to catch price. You can see here we had broken out over this 201.90, which was the old high, and we've really never retested it. I mean, we kind of screwed around over here and then came back up, but we've never really come back down. So my thinking is that any correction of any type of size or magnitude, and I'm not just talking about a gap down of 100 points and 10 points. We're talking SPY, so this would be $1. I'm not talking about a dollar gap down and then futzing around in range. I'm talking about any type of sustainable sell-off. I think that between this old high and the old potential left shoulder of 199.06 would catch price, and I suspect that the 100 and the 50 are going to move up into that range. You can see they're almost there. So that level to me would be very, very interesting if we get something more than a 20-day moving average test. So my first price target would be the 20, and then after that, somewhere in that range, I think would be of interest as far as correction goes. Obviously, we'd have to see that. I think as of this moment when I'm filming this, the futures had been down over 8 points. They're down about a little under 7 now. So it looks like we're going to get a bit of a gap down in the morning. We'll see how that's met, if it's met with buyers and if it's met with more sellers, like if it triggers stop losses and it starts moving price lower. So I'm keeping an eye on that. IWM has been obviously was a little bit weaker on Friday. It had been holding up pretty well. Again, this 117.37, I keep sound like a broken record. I say this every week. Anything above there seems to be unsustainable. Anything above there is bullish. Anything below there is less bullish. But you can see Friday was met with some sellers. We did actually come back and retest the 20. I think if this has some type of a pullback, we probably can easily come back here and see this 200-day. If that, in this prior uptrend that we had snapped, then we got back over. It wouldn't shock me to see that retested. But IWM is obviously it's kind of a bit of a choppy mess. This high volume node here around the 115.89 is a really key level. So I'm keeping an eye on that area. You can see that this was the dump bar high of day. Excuse me. So 115.91. Anything between there and 115.89, I think, is a really key area for this IWM to hold if it's going to stay bullish. You can see this was a reversal bar, and look what it led to. So anything I think over there remains bullish. Anything below there I think remains less bullish. Another one that has been an absolute beast is the Qs. Nasdaq, you could see, had a breakout on a gap fashion. We did come back to kind of test into there. We didn't quite fully fill this, to do the retest. We didn't have a full gap fill, but we did come back, and then we have been a bit off to the races. And we did get back over this uptrend line here, you can see, and we've sort of we're sort of in a bit of a rising wedge. It is starting to break away and get a little bit steep, and you can see that we're coming into some Fibonacci extensions. The 1 point, this is actually not labeled correctly. It would help if it was. It's actually 1.618 fib extension. We're getting kind of close to there. That's 106.87. That's usually a point of inflection, at least for technicians. It is a little bit shy of there. We'll have to see how that handles itself. On any type of a pullback, this was a bit of a breakout in the range, which was also the 1.272, which is the 103s. So that area would probably will coincide roughly with the 20-day moving average. I would think that that's the first line of that's the first important reference low. Then the high of the gap, which is 101.75. Anything over there, I thought was bullish, and we're obviously well over there. So that area, somewhere between these areas, are very important on any type of a more sustained pullback of a couple of points. And then obviously the old high breakout, which was 100.56, which is now $6 away, so that's a little bit far. We'll see how that goes. One of the reasons this index has been up this much, and one of the reasons why the market, I think, as a whole has been so strong is because of Apple. Apple has been an absolute monster. It's one that I nailed really perfectly, and then one I got out of a little bit too early. I got back in, and then a little bit early again out. But the stock is a beast. You can see that it's been in this really strong uptrend. It's starting to get a little bit steep. It's testing now on the outside of even this still higher channel, and up at the 119.75. I'm going to do a really in-depth solo video on Apple, but if you're not going to watch that, let's just discuss this. Apple, I think, anytime when it's trading over its 20-day moving average is bullish. Anything below there to me gets less bullish, just with my experience with Apple. It would not shock me to see some type of a retest into that area, which roughly coincides with the bottom of this channel here. So I'm keeping an eye on that for some type of a pullback. Apple, though, however, on the really big macro picture, has a very large 100. Again, I guess I had a mental block. Nope, I got that one right, actually. Sorry. This has a 1.618 on the macro fib from the old highs. Let's do it on a weekly. You can see from this old high here down to the trough low. Down here. And if you do a 1.618 fib extension, it takes you up to 128.97. That is quite a bit. There are some other levels in between there that if you watch my dedicated video, I'm going to discuss, and I'll give you a little bit of hint. We're roughly about there. So let's go into that at a later point. But I do think if there is some type of a pullback in the market and Apple is susceptible, it would be a at the very least for a day trade, buy off the 20 MA with a right or right out stop. And if it did pull back a little bit further into range, this 110.30 area was the last breakout, so that would be the next reference support, somewhere in this 109.03 to 110.30. If there's any type of a larger pullback in Apple, it seems like it's far away. Although because we're back up at 120, but momentum stocks tend to move fast. It wouldn't surprise me if we did have some type of a pullback. Obviously, there's nothing in this chart other than the fact that it's extended to suggest a pullback. I do think it is going to retest the 20 at some point, so just keep an eye on the 20 MA. If you've missed Apple, it's really hard to chase here. I had talked about selling at 109.03 and then getting back in once I saw it took this consolidation. I got out roughly around here. It was, I think, just close to 114. I'd have to check the fills. But you can see we've gotten up to 120, almost to 120, and it's a little bit frustrating because I haven't really, for the most part, been along for that ride other than in some longer-term accounts and not in major size like in the trading account. So that's Apple. One idea I had talked about last week as a right or right out play was this FCX. I had said that this had the potential for a professional gap. That obviously failed the next day. I tweeted it out on the stream. And it was null and void. You had a bit of a bounce, and then you had this enormous gap down on Friday with the crash kind of in commodities led by oil. Let me show you that to you guys quickly. HG is the /HG is the copper futures. You can see this completely fell apart, so obviously Freeport is going to have a hard time standing up in the face of that. Let's go take a look at a longer term chart though, a 20 year monthly. I don't know why these keep coming. You can see it broke a really important level, this $2.99 spike low, and we are now, we had tested below there, kind of came back up, and now we are trading below there. So I think that there's some room in copper, possibly down to the 61.8, which is the $2.55 point, let's just call it 255. I think that area should be some type of a support just based on Fibonacci levels. If not, it could fall further. You see that in crude oil. It had this well-defined uptrend, the financial crisis crash, the subsequent rally to lower highs, and then we've kind of fallen apart here. I'm sorry for this to keep flashing. It just won't go away on the longer-term chart, so just try to ignore that. You can see, though, the 20-week moving average, you can see down here kind of supported, over here in the depths of the crash supported, and now we're coming into it again. So that is going to be an area that I'm going to be watching of some extreme interest to me, and that's about $4 or so lower from where we currently are. That's around 60.30. I think that area starts getting a little bit interesting. It might be a little bit of more of a spike. You can see here we violated it a little bit, so maybe we do come down to the 78.6 fib, which is 57s. If not, you can see on a longer term chart with a trend that this trend has held perfectly. That would, though, suggest that oil, assuming it comes down in a straight line, we could bounce back up and then meander and then come back down. But if we did get back down there really quickly, this could take oil into the 40s, the mid 40s. So that would be kind of a retest here. I don't necessarily know that's going to happen. I'm really looking for this area to hold. I also think a lot of producers have their costs around that area. So if there's not some type of a financial crisis, I'm not really sure why oil would fall apart to this extreme, although I know a lot of people had been playing long speculatively. I know that they've been getting stopped out. I know a lot of hedge funds are probably blowing up on this. And the Saudis are still pumping full speed ahead. And you also have some really big innovations in the shale technologies that have led to a lot of increase in oil that was not there back in the days here. So it does not surprise me that when you increase supply, the price comes down. So I am though looking at some of these with some of the major integrated, and I'm going to discuss some of that on the stream this week. I still have a little bit more research to do before I talk about any buy the dip types of lists. Let's get back into Momo. Baba has been, let's take it back to a little bit more current time here. Go away. Baba has just been in a bit of a flag. It's been holding this 20-day moving average. If you're playing it long, I would say that you want to use this 20-day moving average here as a first level of a stop if you're long now. If you're looking to enter long, I would think over this day would be a good spot. That's that 115.17. I think if you get over there, it probably puts the old highs back into play. I'm sort of looking at this as a bit of a bull flag, although the obviously we're with a bit of a lower high here than here. Let me redraw that drawing. There we go. So I have no position currently in Baba. I'm just sort of playing wait and see. If we break this downtrend and we could take this high, I think then the stock probably has some legs. But look how extreme this run-up was. It does not shock me that it's going to spend a little bit of time with some price consolidation. That's probably a lot healthier for the stock in the longer run than it would if it made a spike to like 150 right away, like .com type of days. Facebook is one I have. This is a pretty active chart. Has started to do something that is important for me to see for a stock to be back to being a buy the dips, and I think it probably is at this point. We had a low here. It's not really that important at the moment here. We had a low here. We've now made a higher low here, and we've now done something we haven't done in a while in the last couple of weeks. We have now made a higher high. So we closed into the gap. Anything over this 76.88 I think is fairly bullish. this bar here had stopped. You can see the 50-day moving average had been a really big resistance point. It should now be a support point. So my thinking is anywhere between 76.88 and the 50-day, which is 76.18, should now be support. Anything below there, and I disavow knowledge of this trade. Not to say that I would become super duper bearish on the stock, but I don't think it would be as much of a long. I really think that the stock needs to stay over the 76.88. I do think we'll fill the gap, and after that we could start talking about some Fibonacci extensions. Hint: the first one would be up here in the 82s. Although I would have to recalculate that. I think that's using some older figures. So let's actually not use the 82. We'll just focus on this gap fill up here. Let's say to the 80s for now, and then if we take this high, then we'll discuss going beyond there. But I do think that Facebook is back on the buy the dips list as long as we hold between the 50-day moving average and the gap. So that to me is Facebook. It's hard to mention Facebook without Twitter, although they are both very, very different stories. This one has been much weaker. You can see that we had a bit of a squeeze here, came back down into range, and I've said that this is probably going to trade somewhere in the 42s, with 35 on some type of a market dump being the probably a good buy point if we got down there. So what happened here? We actually finally crossed over the downtrend line, but for me this is really more by time than price, because you can see price is still in this choppy consolidation range. This low was not an excess low, so it's not what I would consider secure. And for me, for Twitter to really get bullish, I really need to see this reversal day taken out. The high of that day was 43.95. So if we can get above there and then take 44.58, then I think the stock is probably going to try and fill the gap, at least up to the this area over here in the 46s, and then we'll discuss maybe a little bit more after that based on the character of the move, and if it's a straight line or if there's some type of a pullback. My guess is it'll run up and then do some kind of like a pullback and then continue further. But as of now, I really don't see that much in Twitter as a buy until we start taking out these highs, and at the very least 43.95, because that was the the spike high with the reversal day. So that's what I'll be focusing on, and that's what I think you guys should be focusing on as well. Let's take a look. One I get a lot of questions at, and I talk about on the stream a lot lately, is Gilead. We are starting to get a little oversold in terms of the stochastics. But with the stochastics, you really need to see them not only bottom, they need to kind of turn back up. So we're really early in that process. One thing I don't really like about this stock here, let me just show you on a bit of a longer time frame on a daily. You can see anytime we've hit this red upward line, it's been cause for a pretty large pullback, and this time was no exception. I had a lot of people arguing on the stream with me. They have all been probably not happy about this move. My thinking here with this stock is that we had a bit of a spike low here, and that took price to $100. We had a reversal, a pretty strong reversal off of that, and then have subsequently just fallen down, and we're still below this trend. So for me, the line in the sand, if you're long this stock, it's got to really be $100. Anything south of there, you could see we had a bit of a look below and fail, and I had discussed this week anything over this candle here, this high of day of this 101.38, I was really looking for it this day on Thursday. I thought would be a buy if we can get over there with some conviction, and we didn't really. I mean, we got a couple of ticks above, and the stock just subsequently failed. It's been hugging this 100-day MA, and now we're below it, and we're resisting there. So I think you really have to see this downtrend line snap, and you need to see a taking of this 101.55 for sure. For me, personally, I wouldn't really want to be in the stock until you take out this high a day here, this 103.97. I think if you take that, you probably are done with this range, and this was a consolidation range, and then you're kind of in a move back up. Although there are some buyers up here, who are wrong, who want to be made whole, so I think you will have some resistance up here in the 105, 106s. I think this stock has a lot of repair to do, and I would like to see it I'd like to see another washout, and maybe, I always love to see double bottoms. They're really powerful references. Maybe we get somewhere between the 91.73 and this 200 MA, $90. I would be a interested possible buyer there for right out. Or I would really love, I don't know if we're going to see this. I mean, this market has been one of the most forgiving markets I've ever seen. I would love to see a retest in the 84s of the real breakout of this stock that we have never seen in recent time. I went a little bit too far. You can see here, though, this was really the breakout of the stock. We kind of tested up here, came back, and then we've gone through it, and it's never been retested. This area to me would be an absolute screaming buy. I would be selling puts down there for sure, but I don't necessarily know if we're going to see it. I do think it is possible that we do retest this low, and maybe the 200 MA is sort of in sync with that at the time. But Gilead for me right here, I'm not long it. I really wouldn't be sleeping too well if I was until I see that break. So that's Gilead. Google has been doing not that much. I talked about this as a short. I've been out of it for a little bit though. After the initial break, it's kind of been meandering though. You can see Google is still in a bit of a downtrend. We had gotten back to retest this breakdown. We never got back up to test here, and it's just been sort of trying to break out with a little bit of low conviction. I guess that if we can take this high here, this 568.73, you'd be changing the pattern because you have a low here, you'd have now a higher low, and then if you took this, you'd have a higher high. So if you could take that area, I think Google could go back on the long list and play it that way. Or if you're really quick, you can take it on some type of a break over this, a real break over this downtrend line. But then keep in mind, around this 560, you're going to probably have some 50-day moving average sellers who and short initiators or what have you. If you can take the 50, I think that you will see a move back up. So that's Google. I always like to see stocks. I don't always have to be the first guy in, the hero. I like to see stocks make higher lows and higher highs. It is not doing that. It is making lower highs and lower lows. This might be a bit of a pattern change, but to see that, we need that confirmation over this high. So just set the alert at 568.73. Let's keep going. Kinder Morgan is one I've been discussing, the inverse head and shoulders pattern. It hit one of my price targets here on Thursday. It did it really quickly into the close. I had said to sell some. We had a bit of a pullback on Friday. It's still looking fairly healthy, though, but this bar was on some pretty decent volume. There was a lot of short covering here. I use this to take off quite a bit of the position. I am by no means in this position in any type of size like I was before. We had a little bit of a sell-off here. I had discussed taking some profits on a bit of a break somewhere in this bar. I don't want to get into too much detail. It was for sure not on the lows. It was somewhere near the break in here, which was still pretty decent. So if you did take some profits there or you got stopped out, you're okay. I actually really didn't. I had taken a very little bit over here on this breakdown, and then I was mostly in the position. I had thought that anything still holding this 39.26 was okay. We didn't even get a full retest there, and we just shot up here. So I will say this, that I am largely out of this position. I did it on this spike. I had tweeted it out. I still think that it's possible that we do get the full extension up to the into 45s. I do still have some long. I am using this bar, this low of day, as a stop, this 40.66. So if we do get below there, I would think that you might want to take some off. Netflix is a debacle. I'm not in this stock long or short. I kind of think it is an okay short if you're long. I mean, if you're in there. I wouldn't initiate here just yet. I would probably wait for some type of a bounce. But you can see Netflix probably should have gone lower initially, but Mark Cuban got in there, and he mucked up the chart a bit, I think. But anyway, the stock had gotten above its gap high of day, and it had been chopping there. This was starting to look fairly bullish, actually, and I had said that any type of a move over this range, we would go up to fill the gap, but anything below here, we would go lower. It did snap and go lower. I unfortunately wasn't in the trade. You can't be in all trades all the time. But you can see that it had a very weak bounce, and now it's just been making lower lows. I think that it's possible that this low gets retested and possibly even violated if there's some type of weakness in the market, and maybe we try the retest that pre-crash high of the 304.79. That was before Netflix completely imploded. So it wouldn't shock me to see if that type of a move takes place. If Netflix does come back up, I think that any move over this high, this reversal bar, this 387.05, would be a long. I think that would kind of be a bit of a seller shut-off pattern, although we are obviously a long way from that. I've been getting a lot of questions on Priceline. It's not one I've really covered lately, mainly because I don't really think there's much of a trade in this at the moment. Let's discuss what we've been seeing. We've been seeing lower highs. You can see up here we had this high is lower, this high is still lower. I had discussed Priceline possibly being a potential short. You could see it, there was this kind of wedge here. We snapped, and I thought if we could come back and retest there, it would be a short. We almost got there. We stopped short of that. We came down pretty hard, although we do now have a higher low in place. I think if we could take this high in Priceline, this 1229, then I would say that the pattern is probably starting to reverse and heal, because you'd have not only taken this high from a higher low, but you'd have also snapped one of the secondary downtrend lines. So that's sort of what I'm watching with Priceline. I don't really see much in terms of what to do here. You can see, let's see if I can draw this in. What low do I want to use? I'll use that low. You can see we're kind of just in this triangular wedge. So any break above here is probably a long. Any break down here, I think would be a short, because my guess is on a breakdown there, you'd also be taking out the 50-day, and you'd probably get a lot of people stopped. You did have a bit of a rally here. It's in a bit of a range. I want to see a downtrend break, frankly. I would enter on the downtrend break, probably add over this high, but right now it's in range. There's really nothing there as of tonight. I'm going to end on Tesla. I hate what Morgan Stanley is doing with this stock. I think that they're really making a mockery of their Tesla coverage. I don't like their erratic upgrades and then their quick downgrades and then upgrades. I think they're playing a really dangerous game of pool, so to speak. You can see here, though, the stock is starting to make higher lows and higher highs, and we are now at a pretty critical area of this sort of up channel. We are right at the 50-day. We are right at this channel low. I really would need to see Tesla take that dump bar high of day, this 250-278. I think over that we will easily fill the gap, because it wasn't really that terrible of a gap, and we probably would get back up to the 265 level. If we can get close over this 265, which was the regular head and shoulders, anywhere over 265 to 265.54, I think the stock has a potential of retesting the old highs. Right here it looks a little bit vulnerable, though. If we do snap this with the 50-day, I think it could easily come back and retest those 220 lows. So we have to be really, really cautious with that. Actually, we have a bit of a, the 200 actually has risen. So I think that if we snap this, the first stop actually, let me revise that, would be to this 200-day moving average, which also coincides with this high volume node, which is the 231s area. So I think that would be the first target. If you're going to play the snap short, this would be your first target to cover. And then if that gives, it is possible that we would come back down here. So I always like to talk time frames and not give the worst case scenario. I do respect that some people like to want to see the interim steps. So if we do snap this channel, I think we see the 200, and if we snap that, I think we see the retest of these lows down here. So that's what I'm keeping an eye on. This high of day here, and then obviously this this high of day and low of day. You can see that would be the snap of the confirmed snap of the channel. So let's use that big bar as our entry for the long, either over 252.78 or below 242.17. So that is this day to me is the key. So with that said, one more thing. If you take a look at TLT, this has been forming. It had this exhaustion move high. It's had its pullback low. The 2009 peak of the the kind of bond rally panic was 123.15. So we're getting back up over there. Sort of like my analysis of IWM, anything over that price level starts becoming a little bit unsustainable, and that might be where you'd want to try and attempt some shorts, although I would wait for some type of a reversal pattern to emerge. You don't want to get in front of a freight train. This is definitely forming a bit of a U bottom. Maybe it does some type of a cup and handle here. If we pause here, though, and we just kind of keep banging our head on this area and go sideways or some type of a range chop, that I would not be looking to short, because I think that there could be some type of a retest of this high. If it happens spiky with another bit of a tail with a lower high, then you could use that as a high a day reference stop for a short. So let's keep our eyes on that this week. So again, happy Thanksgiving. If you like this video, please hit the like, and be sure to follow me on Twitter. My handle is @JustinPulitzer. Cheers.